Well, good morning and good afternoon, everyone. It's great to be here with you today. My name is Shannon Smith, and I'm the partner in charge of international tax for Eide Bailly. And with me also is Jared Johnson, and he is the principal in charge of our global mobility practice. I'm based in Colorado. Jared is based in Salt Lake, but we serve clients all over the globe. Eide Bailly is a member firm of the network HLB International, and that network allows us to serve our clients all over the globe. And with us today, we have special guests from our UK member firm, Beaver and Struthers. And so with that, I will turn it over to Caroline Monk, who will give us our introductions.
Thank you, Shannon, and thank you, everyone. It's brilliant to be with you today. This is, as Shannon said, this is part of our Go Global series. It's part 2, which is introducing US businesses to the UK. And we're really proud to be hosting this with our HLB colleagues at Eide Bailly. So part 1 focused on UK businesses coming to the UK. And today we're flipping the tables slightly to see how it works in reverse. It was really interesting the first session to listen to our US counterparts and to learn how similar many aspects are between the US and the UK, but more interesting how various differences come about. So hopefully we'll be able to explore some of those differences in today's session. So my name, as Shannon said, is Caroline Monk. I'm one of the executive partners for Beaver and Struthers. We're an HLB member firm headquartered in Manchester, in England, and obviously today is special because we're very excited to be presenting to you. But it is also special because we have literally just moved into our new offices this week, and we're still learning how to manage that process and to work together. So hopefully we won't have any more teething problems, but we shall see how we go. So if I could first introduce you to my colleagues Shalim and Julie, who are now sat together, and they can just talk quickly about themselves.
Thanks very much, Caroline. It's a pleasure to be here. Hello, everyone. My name's Shalim Rahman. I'm a SME partner at Beaver and Struthers, so I specialise in accounts and sort of commercial issues for businesses generally up to the 10 million threshold, and then in the UK, businesses are required to be audited, and I'll touch on that as we go along. But yeah, that's me, and I'm a chartered accountant, been an accountant for about 20 years and a partner for about 14 of those years. I'll just pass it on to my colleague, Julie.
Hi, I'm Julie. I'm a tax director at Beaver and Struthers. And if we're talking about years, we've been with the firm, I think I've been around for about 25 years, which is a long time. And we deal with all sorts of UK tax aspects, and I also help with the HLB network contacts and the international tax aspects that we come across through those contacts.
Thank you, Julie. And then finally, just to finish the introduction before we get going into the meat of today's talk, can I introduce you to Ben Ward, who, as the slide says, is Business Development Manager within Midas, which is the Manchester Inward Development Agency. Ben, would you just like to introduce yourself?
Hi, thanks, Caroline. Well, as it says, and Caroline said, I'm Ben Ward, BDM for the Creative Digital Tech team at Midas. We're the investment promotion agency for Greater Manchester. So we are a funded support agency acting on behalf of Greater Manchester for international companies who are looking to grow. And we act on behalf of 10 local authorities within the region. You will hear more about our services going forward. But we work with Beaver and Struthers quite closely as part of our kind of soft landing package. So we've got a lot of experience working with those international businesses and with Beaver to help them set up their company. And I've been here for about 4 years. Prior to that, I was a recruiter for about 5-6 years. So skills is one of my kind of key strengths, and one of the main reasons a lot of businesses are looking at their location strategies. So thank you for having me today.
Thanks, Ben. So we'll start with why the UK. And I suppose I'd flip that on its side and say, well, why not the UK? We like to think we're a business-friendly environment. Being in the UK provides access to a market with over 60 million people, with diverse suppliers and partners. And in the UK, businesses can benefit from a range of support programs to both welcome incoming companies and businesses, and that's where Ben will be talking in a short while, but also to help those businesses of all shapes and sizes to grow. We like to believe that we are still a top-rated European economy. I appreciate that recent prime ministers have tried their best to thwart that position and erode it, but we do like to think we're still there and we're back on a track. The UK is a market to attract global talent and the best talent available outside present company, clearly. We have a large labour force. We have lower labour costs than many of our other European counterparts. Our corporation tax rates, which though increasing, do remain competitive, and that's something Julie will be talking about later on in our presentation. So we do think our environment is a business-friendly environment for people to step into. We think we have an ecosystem that grows and encourages innovative companies to develop and lead. We do like to think we're a leading environment in relation to the net zero carbon journey that we're all embarking on, and clearly is in our mind at the moment with COP27 moving on. And the final point we sort of highlighted in that slide is the development of free ports. Our free ports is a relatively new development in the UK, but it's providing special areas in the UK where different, and when we say different, we probably do mean better, economic regulations apply. So that is a very quick snapshot of why you should think about the UK. There's clearly far more detail behind it, but we just wanted to start with that. And if that was a bit of a shameless plug to the UK, the next one's an even bigger shameless plug, because it's like once you've decided the UK, then it becomes Manchester, doesn't it? In our mind, and clearly I am just shamelessly plugging our city here because we're very proud of it, but where else in the UK might you want to be, particularly if you are a soccer fan? But this is probably the perfect place to hand over to Ben to talk about the encouragement and investment scheme in Manchester.
Oh, if you just go back one more slide, please. The start slide, Caroline. Thank you.
Thank you. Too eager, sorry.
No, it's okay. I'm very much a person who will present without what's on the slide in front. So I guess it's why Manchester is a big topic, especially in terms of when we're talking to international businesses, because the UK, when international companies think about it, they think London. Many people that we talk about don't really know that even the general geography, let alone what the business opportunities are around kind of the rest of the UK. So we're very specific in the terms of what we do and the kind of industries that we work with. So on the left here, you can see that we have particularly picked out kind of 6 key areas that are not just around Greater Manchester's strengths. And when I say Manchester, Manchester is made up of 2 cities and 10 local authorities in total. So we have quite a broad, diverse area which captures 2.8 million people. We have a GVA revenue of just shy of £75 billion. And to give you kind of the idea of growth, between 2010 and 2020, that grew from 54 billion to 75 billion. So you're seeing a 40% increase in economic growth just in a 10-year period. And we're also seeing population rates growing at the fastest rate, due, especially post-COVID. We are the most relocated to place after London. We have more investment in terms of property than Amsterdam, Paris, Barcelona combined, and regularly, year on year. I'm going to do this in a different system, but we have 2.5 million square foot of office space complete on a yearly basis consistently. So as you can see, there's massive investment that's being brought into the city. We are led at Midas by a industrial strategy that is very much led by Andy Burnham. If you know anything about UK politics, Andy Burnham is a ex-Labour MP who is very much about kind of the growth of the regions within the UK and the levelling up agenda, and has been very much kind of behind that growth. And what that means is that there's how do we tackle industrial and kind of business needs. So in those kind of 6 key sectors, my team at Midas represents one of those. We're broken into 4 different sector teams. So advanced manufacturing, I am creative, digital and tech. So 2 of those. Net zero falls under our advanced manufacturing team, who also cover the likes of logistics, kind of graphene research and other areas. Financial and professional services, which is many of the companies, of course, here today, but also fintech, insurtechs, those types of businesses. And then life sciences. And each one of these has a key document sat, kind of key hundreds of pages of documents sat behind each one that I cannot go through in 8 minutes today. So please, I will put my details in the chat afterwards. I will put any links to anything that anyone asks me for, and I'll make sure that you get a copy of those for yourselves or for your clients. Can you please move on to the next slide, Caroline? So I'm part of the creative digital and tech team. I'm not going to try and explain the kind of types of companies that are here within life sciences doing genetic research and work within vaccines and cancer research, or some of the more kind of high engineering, low carbon. But what I do know about is digital. So on here you have, just wanted to give you an idea of the types of companies that have not just a presence, but a significant presence within the city. Roku, for example, our most recent, actually they are our largest inward investments kind of company from kind of initial offering, 120,000 square foot of office space, going to be employing 500 people. Amazon Web Services have 600 people within the city. Booking.com have their largest office outside of Amsterdam here, with 1,600 people working. On the right hand side, so under those kind of unicorns banner, we have 6 unicorns operating in the region. So they're all founded, grown, and have reached that mythical unicorn status that everyone likes to talk about. But what you can see here is in the digital side, it's a myriad of companies that are working here. At Midas, we also account manage a large number of these businesses, so we understand the problems, the struggles, the successes, and the engagement opportunities for SMEs and other businesses to work with them. And a lot of these come together and talk about how to tackle the international issues around skills. So please drop me a message. Happy to talk about any of these. Some of these are NDA'd, but others we can talk about quite openly. Can you move on to the next slide, please, Caroline? But what I wanted to probably focus on more is about Midas and who we are, because without knowing what we can do in terms of support to yourselves and any clients that are looking to grow into the UK, then it's quite difficult to know why we work with a lot of those companies listed on that slide. So Midas, we are a fully funded, wholly owned business by GMCA. So GMCA, the Greater Manchester Combined Authority, and Burnham is our boss, who I've spoken about before. We like talking about Andy. He is a champion of Greater Manchester. We are a team of 25 people broken into those 4 or 5 different sector areas. But we are recognised regularly as kind of the inward investment agency within the UK that publishes the most number of jobs that are created out of the regional cities. Every pound that is put into Midas returns 12 into the local economy. I wish that would be the same for my pension, but you know, maybe one day I can get that. But what we do is we sit within a group called the Growth Company, which is that first one in the middle. And the Growth Company is a 1,200 employee economic development agency that has really transformed the growth of Manchester. And if anyone knows about the history, Manchester, it was the birthplace of the programmable, so the birthplace of the Industrial Revolution, from cotton all the way through to the splitting of the atom taking place here, through to the first programmable, so the first memory stored programmable computer being invented, and that changed the way computers operate today. So we do things differently here, and the Growth Company is an example. This model is replicated across the UK, and we have 20 to 25 businesses. It changes on a daily basis, that are all around skills, SME support, large business support, and 95% of those services are funded. We are also internationally plugged into networks such as Department for International Trade. We have close links with, for example, the Austin Business Council, with Toronto, with the Canadian government and Ontario government. We have links with Phoenix. We have MOUs in place across Germany, China, India, and as you can see there, we have those two businesses, Manchester China Forum and Manchester India Partnership. Conscious of time, I could talk about each one of these in length, so please can we move on to the final slide. But what is it that we actually do for companies at Midas? We have all these networks, all these supports. Think of us as super connectors, but think of us as on the ground information and knowledge. From that initial first stage of being able to build a business case, why should a company set up? And that's facts, figures, stats. How much does it cost to employ? How much does it cost to have an office? How much does it cost to find, kind of win that first contract? What are marketing costs? What are any of those things we can put into a spreadsheet and put something that a CFO would be happy to see. But also it's a story. It's a city is anecdotal. It's culture. It's feeling. It's getting to know the people. And increasingly, we're having to do more work around CSR opportunities. How can businesses, take their goals? What challenge are they trying to achieve, and how can location solve that? Then the next bit is, so that's the business case. You may have met, the company may have made their mind up, they may not have made their mind up. The next stage is bring the company in, show them round, tour them, whether that's a day, 2 days, part of a big group, bring a delegation, bring their families. I've taken CEOs with their wife and children around a city centre, get them to know the city, whether that's property, meeting with Beaver and Struthers to help set up the business, going to networking events, even talking at events. So, we regularly get asked for speakers, so we can suggest speakers for those. And then we do the boring bit. It's get the office registered, get the business registered. Sorry, Beaver, but that's the fun. That's where the hard work really has to begin. And not being toured around and showed. But we don't just then, once a business is set up, go run free in the city. We'll keep, do we kind of account manage, or do we have regular catch-ups to make sure they're doing okay? Or do we kind of one of our partners in a best place to help do that? And then we will then promote that initiative. We've got a marketing and PR team alongside us who will help write those kind of PR releases to say X business has set up within Greater Manchester, and do we then continue that story? Do you want to get plugged into any opportunities in public sector to help grow the local ecosystem? There's so much that we can do to support a business. 8 minutes, which I'm probably over, doesn't quite do it justice. But please get in touch. I'll be happy to have conversations with anyone on this call or any of your clients, or in combination. And hopefully I'll be back in the US in March next year as part of South by Southwest, with Andy Burnham, with a Manchester contingent, so you'll be able to meet some of our businesses and one of the largest Manchester bands should be playing. So if anyone's there, I can't talk about it, but one of the largest bands that's known in the US. Yeah, so thank you for having me. And I don't know if there's a question session I can answer after, but I'll be happy to answer any questions in the chat.
Thank you, Ben. That's really appreciated. So now, having talked a little bit about why you might want to do business in the UK, I'm going to pass over to Shaleem now, who's going to talk more about the legal structures and what you might need to consider within those considerations in the UK. So thank you, Shaleem.
Thank you, Caroline. So on the slide in front of you, there are 4 entities we've mentioned, which are essentially a limited company, a limited liability partnership, a general partnership, and a sole trader. If I just start with giving you a few statistics about the business population in the UK. So this is based on a UK government report dated in October 2021. There were 5.6 million private sector businesses in the UK, of which 3.2 million were sole traders, which equates to 57% of the business population. 2 million of the 5.6 million were limited companies, which is a 36% share. Ordinary partnerships, general partnerships, made up 7% at 384,000 partnerships, and then other entity types made up the rest. So you're left with 0.3%, which is a total of about 16,000 businesses out of the 5.6, and that includes where LLPs would sit. So hopefully you can see that the biggest category of business in the UK is a sole trader, but generally it's not something that's really applicable to an international business. And the main reason is it's not particularly scalable and it's got unlimited liability. And when we're dealing with overseas clients from the UK perspective coming to the UK, they want to limit their exposure to UK liabilities. When they expand to other areas in the world, they want to set up separate liability companies, limited liability companies, to limit that exposure. A sole trader doesn't achieve that. It tends to work better for smaller companies. And a lot of the companies in the UK, I mean, roughly of the 5.6 million companies or businesses in the UK, 5.5 million were recorded as being small, as in between 0 and 49 employees. And indeed, 4.2 million of these businesses had no employees. So I'm going to rule out the sole trader because it doesn't really apply to businesses coming from overseas to the UK. And I'm just going to, and also the partnership, because again, it's got unlimited liability, which isn't attractive to most businesses trying to, come over here. So I'm just going to focus on the top 2 here, which are the limited company and to a lesser extent, the limited liability partnership. I think it does have its uses. And then I'm briefly going to talk about UK establishments and essentially trading from the US in the UK, but without actually setting up an establishment. So if we can go to the next slide, please. So very briefly, I'm just going to talk about the advantages of a limited company. So I think the first thing is it's very quick and easy to set up a UK company. Assuming the KYC, the Know Your Client checks, are relatively straightforward and we receive those in good time, we have formed companies within 24 hours. So that is a very rapid turnaround. And the UK is probably one of the easiest places in the world to actually set up a company. It's very straightforward. I'll talk a bit more about actually what you need to set up a company, but it's very straightforward. And as I say, it's very quick. The advantage of a limited company is the limited liability. The owners of the business are separate to the directors of the business, and your personal assets are protected, which wouldn't quite be the case with a sole trader or a partnership. So that's a big draw of having limited liability protection. It's only what's in the company that's at stake should there be a claim against the company. So that's very attractive. The flexibility of a limited company, I think the good thing is that in the UK, there's no minimum level of share capital. So you can start with £1 share capital. which is great. There's areas, well, there's different countries in Europe where there's a minimum of 25,000 euros to set up a company. In the UK, you just need £1 and that would be sufficient. Now, that might not help if you're trying to get business funding, because what the business funders might think is that you're undercapitalized with a £1 balance sheet effectively. So, you know, there's some consideration as to how you structure the balance sheet when you set up a company. And sometimes, you know, it might be an idea to inject a large amount of share capital just to give confidence to external sort of stakeholders who want to invest in the business or, you know, join the party with you and help and support you. The tax side of things, my colleague Julie sat next to me will go into a bit more detail about that, but UK corporation tax is going up. It's at the moment, it's 19% flat rate, which is quite, well, it's a very attractive rate in the G7, in the G20. It is unfortunately going up to 25% from April next year. And I think a lot of that is to do with the COVID spending that the government's done, trying to recoup that. But my colleague Julie will explain that in a bit more detail. And a limited company is attractive because it opens up the opportunities for visas and getting different types of visas. Now, I was on the Ed Bailey presentation, I think it was last week, and the point was made that accountants and solicitors, lawyers, are totally separate in the US, and that's exactly the case here. So as accountants, we don't really advise on visa applications and requirements. They are typically done by immigration lawyers or employment lawyers. They have the speciality. And so what we do, as Midas does, we signpost and direct, you know, our clients to the best individuals who can deal with those problems. But visas are quite flexible with a limited company, and that's one of the big draws of a limited company. So if I just flick on to the next slide. Okay, so things to consider. Just go back one slide, Caroline. Oh, brilliant. Okay, so now what I found quite interesting on the US presentation was that there is no need to file accounts at a public register. Well, a company does, there's no equivalent of like a database for accounts in the US. In the UK, there's a body called Companies House. So every single company has to file a set of accounts there every year. And the reason is the government, well, the structure of the company is limited liability. So to earn that limited liability, you've got to disclose some information to the public so that they basically can get some information and trade with you with transparency. So it's a quid pro quo. For that limited liability, you've got to be transparent and you have to file accounts at a public register, which is separate to the tax authority. You also have to send accounts to the UK's tax authority, HM Revenue and Customs. Now, in terms of the accounts have to go in every year. There is an audit threshold in the UK. So by law, all companies have to be audited in the UK. But there are exemptions if you are small. And by small, there are a few definitions, but basically it's a business with turnover of less than £10.2 million, or a balance sheet total, which is your gross assets, your fixed assets and your current assets of less than £5.1 million, or 50 employees. You've got to stay below two of those thresholds, essentially. And by doing that, you're classified as small. You don't have to have an audited set of accounts. If you breach two of those thresholds, you have to be audited. And that is separate to having the accounts compiled, which is just being put together. They actually have to be tested then. So in the UK, audits are a requirement for any company that's not small. So it's a definite consideration. One good thing about the UK, there's only minimum of one director required. So when we look at the ownership of a company in the UK, setting it up, you just need one shareholder and one director, and they can be the same person. And job done with £1 share capital. There's your limited company set up. However, when we're looking at our overseas clients coming over to the UK to set up, do they set it up as a subsidiary? Do they set it up as a standalone company owned by private individuals? Do they set it up as a branch? These are very interesting questions, and I think that in most cases, what we found is that the subsidiary route is the most suitable. The standalone can work in certain instances, and there's been an instance where basically a client wanted to claim a special investment relief. EIS is called, what's the stand for? Enterprise Investment Scheme Relief, but they had to be a standalone company to apply for that. So they totally changed the mind of being a subsidiary to being standalone. So this is where you need the professional advice before you go and set it up. Spend a bit of time, because there's some key things you might miss out on. EMI options, which are share option schemes. You can't do it as a, you have to do it in a standalone company. So there's certain things you have to be aware of. So ownership considerations, need to think about it before you make your mind up. And the tax side of things, I think Julie's going to touch on that. But there's things like R&D, which is much easier in a limited company. But Julie will speak about that in a few minutes. So if we could just go to the next slide, please. So I think we mentioned.
Shalene, could I clarify one question in terms of the exemptions for the audit? Are you looking at the global company or just the UK operations?
Yeah, very good point, Shannon. You're looking at the group as a whole. Okay. So it's the global company. So unfortunately, you may have a company in the UK which has got one transaction, and it may be £1,000 transaction, a sale. That will have to be audited and subject to auditors' fees, purely because the group is bigger than those thresholds I gave. So yeah, that's totally correct, Shannon.
Thanks.
Okay, so the advantages of the UK, I think, well, the things to consider, very quick, we've mentioned the protection that's available, the flexibility, profit distributions, dividends, salaries. You can set different levels of dividends and salaries. The good thing about if you set up a company in the UK, there's no withholding tax on payment of dividends back to the parent company back in the US. So that's a good way of transferring funds. Again, it's very good for visas. The LLP, where we found the LLP, was less than 16,000 LLPs compared to 2 million limited companies. So the LLP is still a little bit confusing even to professional advisors, but essentially it's like a mixture of a limited company and a partnership. And the key advantage to an LLP is probably it's flexible in terms of if you're going to change the owners of the LLP, of the business in the UK on a fairly regular basis, which would happen with, say, accountants or solicitors, then LLP would actually work quite well because it's less complicated from a tax point of view. But other than that, we don't really see many overseas parent companies setting up LLPs in the UK. It's very few and far between. It's transparent for tax, which can be an advantage or can be a disadvantage. So the tax goes back to the original sort of, if it's a corporate partner in an LLP, the profits are shared to the corporate partner who pays corporation tax. If it's an individual partner, they would pay income tax. So there's more complication generally with an LLP, and we don't normally see that as a setup here. And visas, again, I think it's a little bit more restrictive in terms of what visas you can apply for. The limited company offers a little bit more, but an LLP is fairly quick and easy to set up, and we can help with that, and it will work in certain circumstances, but it's not the sort of chosen model. Excellent. Next slide, please. So things to consider. I think really we've touched on most of those. So the R&D credits, again, you can get R&D credits, Julie.
We can get R&D credits. They're only on an LLP. If you've got a corporate partner, then the corporate partner can get R&D credits. But if you've got an individual partner, the individual partner can't. So R&D credits associated with limited companies. And as the LLPs look through, then you'd have to have a corporate partner to be able to get R&D credit through for an LLP.
Absolutely. So I think we've probably spoken on LLPs. Just moving quickly on to UK establishments. So this is essentially where the US business would create an establishment, a permanent establishment in here. And this occurs typically when there is some decision making undertaken in the UK. It could be an executive that's based here that's making decisions. Julie will talk a bit more about exactly how a permanent establishment is established and what the tax implications are there. But the advantages of a UK establishment, you don't have to sort of set up a limited company. However, there is no audit, so there are no audit requirements like in the UK. If you're a limited company, you have to do an audit. Sponsorship might be sponsorship. You can get a representative visa of an overseas business, so that's quite good. And getting credit, because you're not a separate limited company, you're part of the bigger group, the parents. It's potentially easier to get credit. So for a startup, it's very difficult to get credit. If you're just isolated, normally you need to give guarantees from either the directors or a parent company. With this case, there is a larger entity involved. So an establishment does have advantages.
You may not have to file your accounts in America, but you would then have to file your accounts in the UK for your permanent establishment.
Yeah, I mean, I think if you just move on to the quick next slide, please, Caroline. The things to consider. So the point about the accounts, even though it's not a separate legal entity, you still have to register a permanent establishment, also known perhaps as a branch. You have to register that branch at Companies House and also with the UK Tax Authority. And one of the big downsides is that you have to file the US parents' accounts at Companies House. They have to be filed, so for disclosure purposes, and the branch has to work out what profits it has and what tax it has to pay on the UK generated profits and pay tax to the UK Tax Authority. A branch has limited access to R&D. It's not as clear cut as it is with a limited company. And in terms of visas, it's unlikely to work under like an innovator visa. So it's not as ideal, I think, if you're looking to get a visa to settle in the UK for a certain period of time to use a branch. And I think for me, the most commercial sort of like negative point is that you're not getting separate limited liability in another sort of state in the UK. It's part of the US entity. So the US entity is at risk here of any claims against it. You're not separating liability because it's just an extension of that same business. So for me, we don't really do many UK establishments, primarily for the limited liability not being there. So it's something to consider, but it's something that we don't normally see. Just next slide, please, Caroline. So indirect, very quickly, you can be a US business and you're selling goods here in the UK. You don't have to, if you've got no control of decision making taking place here, no payroll, no employees, then there's no need to pay UK taxes on sales made to the UK. However, if you are selling over a certain amount of certain value in the UK, then there could be the requirement to register for VAT, which in the US, I know you have various different state taxes on revenue. In the UK, it's far simpler. There is sort of one countrywide tax called value-added tax. It's at 20%, and it's 20% on most products and services. There are some which are at a lower rate, but generally it's 20%. So if you are selling in the UK at a certain level, there may be a need to register for that, and we would advise, each business on that potential point. And from a payroll perspective, I'll let Julie speak on that because that's part of her section. But it's about, if you have people working on UK matters, you have to look at perhaps where they're based and different contributions might be payable on that. But Julie will be able to speak better on that point. The UK reporting regime. So the company we got here, basically, we split it up into the different types of things you have to file. A company has got certain obligations. If you run payroll, you'll have certain obligations. The VAT, accounts, audits, taxes and personal taxes as well. So if I just quickly run through the company once it's formed has to file a persons of significant control statement at Companies House, which basically for the US and the UK relationship there, it will have to look through and see who are the owners of the US company, the individuals. So anyone who owns more than 25% of the ultimate holding, the ultimate parent company, their names will be stated at the UK's Company House on the PSC register. So that's just for transparency. So something to bear in mind, that names will be at Companies House. The company, when it's formed, has articles and memorandums of association, as most countries have. This is a rule book. When we form a company, we can do it very quickly, as I said, within a day, if we use the standard model articles. But if you want them to be altered, then we would recommend a solicitor who can do that for you, and it'll just take a bit more time. So that's something you have to do. With the company, you have to file accounts within 9 months of the calendar year end. So if you form a company in December, say this year, your year end will be December next year. You then get 9 months after then to file the accounts. So typically that's when you also pay your corporation tax. So they're the main filing requirements for the company. If we go to payroll, I'll jump over to Julie, thank goodness.
We've done this in time order. So the first thing you have to do is set up your limited company, and then the next thing you're doing is looking for your employees to help you run your company in the UK. And if you have employee payroll, and if you're paying them cash, you have to register with HMRC and deduct tax and social security costs from those payments. So what are the first things that we're thinking of when we are taking our employees, and we're looking at what the costs of that are? So we want to know what we're going to pay. So in the UK, as a broad outline, we have national minimum wage regulations, we pay statutory sick pay, and we have 28 days paid holiday. And it's working around these different things. So you then need to know that your employees are eligible to work in the UK, and if they're not, we have to, as an employer, you have to prove that, and if you can't prove it, then there are fines for that. The next stage is that you have to have employers' liability insurance, and then you have to have contracts for your employees. And we, again, as Shalene said earlier, as Eide Bailey said in their presentation, accountants and solicitors are separate people in the UK, so employment contracts, you need a solicitor to help with those. We're then looking at the processing. So we've now got our employee on board. We need to process the payroll. So the cost of processing the payroll, so you pay the employee, you decide what you're paying the employee. We usually run a monthly payroll for most people. So we have 12 payments. And in Europe, people have 13 payments, but in the UK, we usually have 12 payments. And then from those, we deduct tax, national insurance, and then the employer has to pay national insurance, our social security costs, and the employer has to pay some social security costs as well. The employer's social security costs are running us at 13.8%, and you pay that on roughly anything over £9,000 that you pay to the employee. You pay 13.8% employer social security in addition to the employee's wage. The next step is that once you pay your employee, you have to give them you have to offer them a pension scheme, and that's called auto enrolment. So we have to invite them to join a company pension scheme. They're allowed to opt out of that, but we have to invite them. And the employer's contribution for the auto enrolment is a minimum of 3%, and the employees are expected to pay 5% into the auto enrolment pension scheme as well. So it's a joint contribution into that. Now, with the auto enrolment pension scheme, one of the problems we are finding is that you need a UK bank account. And a UK bank account for a UK limited company that's got overseas directors and overseas shareholders can sometimes be quite problematic, and we sometimes take quite a while to set up. So it's making sure we've got things in place that allow us to set up the auto enrolment pension scheme, and then allow our employees to contribute into that. So it's just being a bit of forethought before you jump straight in there. And a bank account is quite key. And getting one I believe it's hard in America as well, but getting one in the UK can be quite time consuming. So it's looking for those contacts. There is one, I'm telling you all about the costs, but also there is one give back that we have an employer allowance. So we do give you a contribution towards, if you're a small company, and you can, for eligible employers, get a contribution of £5,000 towards those employers' national insurance costs, which is quite a benefit. The payroll covers all cash payments that you make to your employee, and you pay as you earn and national social security costs over monthly. But then if you make other payments to your employees, which are non-cash payments, so they're sort of providing them medical insurance, or you're providing them with a car or company car park, fuel for the company car, then you are, there's something called a benefit in kind. And if you have benefit in kind, we report on those on an annual basis, and you then pay employers' national insurance on top of those. And I do realise we are getting into too much detail here. So private medical care is taxable. There are a couple of benefits in kind that aren't taxable, but on the whole, they're reported annually. Next slide.
VAT. So this is the, as I say, we have one rate of VAT in the UK. Once a business reaches £85,000 of turnover in a rolling 12-month period, it's mandatory to register for VAT, and you'd have to send in quarterly VAT returns, which are generally quite straightforward. If you have good accounting software, it normally falls out of your accounting software, and essentially you pay over your VAT on your sales, but you can claim back the VAT on your costs. And some people think it's crazy, but it actually makes sense for a lot of businesses to voluntarily register for VAT, even if their turnover is not £85,000, because first thing, it hides the size of your business. Because if you're a small business and you're under 85,000, you won't be VAT registered, but you can basically register for VAT voluntarily, and then your business turnover is hidden because they don't know you're a small business or a micro business. And of course, the best thing is you can reclaim the VAT on your costs. So voluntary VAT registration works particularly well when you're in a B2B environment. On the next slide. Excellent. Over to you, Caroline.
Thank you both. We'll just give a break and swapping around. There's an awful lot of information I know we're throwing at you. But in terms of accounts, a trading entity, regardless of the structure, will require accounting records to be maintained. And we would say that, wouldn't we? Because we're accounts. Clearly, accountants, clearly it's fundamental to understanding the performance of the business. But these are also required for compliance purposes. That's the word that only us accountants like to use. So we've talked about the VAT returns that Shalene has already discussed, and account companies in the UK are also required to prepare annual financial statements. Now, these statements can be prepared using either UK GAAP or IFRS, International Accounting Standards. And those two pathways are converging, but neither of them are US GAAP. So it is important that you recognise and you ensure those differences between UK GAAP or IFRS and US GAAP are understood. The reality is probably that they aren't so different. There's issues in terminology and disclosures, but as has already been mentioned in this talk before, it's better to ask ahead and be aware of those differences. Shalene has mentioned that accounts in the UK are filed on a public register, and that means exactly what it says, that they are open to everyone to see. The size of the company does dictate how much is filed. So a small company may not need to file certain elements of those accounts, in particular the profit and loss account, and that's very popular as an exemption to take. There is actually an even smaller degree of accounts that you can file if you are what's called a micro company, which means you file very little on the company's house and it's of no interest to anyone. That sounds great. The downside is that it's no interest to anyone who wants to support your business, fund your business, supply your business, buy from your business. So beware, I think, is the point there. And just quickly, in terms of timelines, accounts need to be filed on that public register within 9 months of the year end, following which you get penalties and nasty letters from the authorities. There is under discussion a proposal to shorten that timeline. So if you are coming to the UK in in months or years, do check that timeline because it might not change. And the other point, just to talk quickly about on accounts, is the reference date. When you incorporate your company, the accounting reference date is automatically set for 12 months after incorporation. So if we incorporated a company today, being the 10th of November, the first period of accounts would be to 30th of November 2023. If that's not the date that you want for your accounts to run to, you can change them. But just beware, you can never have an accounting period that goes over 18 months. And also, there is what we call a 5-year rule. That means you can't extend your year end past 12 months more than once every 5 years. There are always exceptions to that rule, but that's the basic rule to remember in your mind. And then I just briefly wanted to touch on the audit, though actually Shannon neatly picked this up already, that yes, in the UK, small companies don't need audits, but if they're part of a large group, you can inadvertently get caught into that. And it is as Shalene says, it can be quite a nuisance. And I'm sort of saying, don't shoot the messenger here, but you might have just that one transaction in the year and you've still got an audit. And unfortunately, audit costs in the UK are well, I'd like to think they're not quite in the lines of audit costs in the US, but they aren't insignificant. So that was a rattle-stop tour of accounts and audit. So we can just fling into tax, which I think is an area that people will be very interested in. Thanks, Julie.
Definitely. So we're on to, so you've done your annual accounts. You're now in a position to prepare your annual corporation tax return. And your corporation tax is based on your accounting profits. We make some adjustments to things like depreciation. In the UK, we have that depreciation and paying capital allowances. And that's probably one of the main adjustments. Other than that, you might have an odd few bits of costs that aren't allowable, but it predominantly will follow your accounting profits. Either you pay corporate tax at 19% currently, that's going up to 25%, as Shalene said earlier, from the 1st of April 23. And it's actually going in a staggered basis. So the first 50,000 will be taxed at 19%, and once you get over 250,000, you tax fully at 25%. And for those profits between 50 and 200,000, that means you have a marginal rate of 26.5%, which is it's a way of bringing in the full 25% on 250 with giving relief to the lower profit companies. The tax is paid 9 months after the year end. If you're a small company, that's profits under 1.5 million, but that 1.5 million is actually divided by the number of companies in the group. So you just need to be aware of that. If you go over 1.5 million divided by your number of companies in the group, you pay tax quarterly, and all quarterly payments on that basis will be paid by the 3 months after the annual accounting year. So you just estimate what you need to pay and pay it over as you go. If you're a very large company, that's turnover, profits over 20 million divided by the number of group companies. I keep saying this, but it does make a difference. Then all your corporate tax, you pay quarterly again, but all the payments have to be made before the actual year end of the company finishes. So you are again estimating. And then when we do the tax return, you can make a balancing payment, but you just get charged interest on that. It's not a huge issue, but it's just being aware. The UK companies are subject to, primarily if you create a UK company, primarily it's subject to UK corporate tax, but there is a management and control rule. So if your company is not actually managed and controlled in the UK, you might find that under a double tax treaty that you could be deemed resident in another country as well. And therefore we have 2 countries that say, wait a minute, you owe tax here, in which case you'd come to a mutual agreement between the countries and try and sort out how that works. So it's just being aware of where your management, and because we do have management control rules, where your management control is. But I think if you've got a company in the UK, yeah, so that's fairly straightforward. But one of the advantages of corporate tax in the UK is you claim R&D tax credits. They're quite advantageous. And you get, if you study different rules for small companies and large companies, but you do get quite a lot of tax back on that, and that's for seeking scientific advancements or projects that seek scientific advancement. If you're a director of a company, you usually have to prepare a personal tax return, and we can help with that as well. And any questions and answers, when basically any questions from the audience, and see if we've got time to answer. But I think we're tight on time.
No, Julie, don't worry. We do have one question while we just work through, and there's a couple of more things to say, but we do have one question from Cameron. It was asking, this one maybe for Shalene, but asking whether business turnover means sales when it comes to VAT.
Yes, it's sales. Yeah, it's sales, and in the UK there are some sales which don't attract VAT, but generally most sales do. So sales of certain products, if they're deemed to be of public interest, will not have VAT. So things like what don't have VAT, Julie? Things like medical supplies.
It's various different things. Insurance doesn't have VAT.
Public transport doesn't have VAT. So things like that. But generally, yes, the answer is it's your sales. It's based on your sales.
And clearly we would say that, but it is a very oft repeated phrase in the UK that VAT is a really complicated tax. And the best thing to do is to ask, because it's very easy to get it wrong inadvertently, you know, and very, what look like irrelevant differences in a product can change it from being a VAT at the full rate or a reduced rate or nothing at all. So we would say that.
Well, don't we? So some things are actually exempt from VAT, in which case you have horrendously complicated calculations as to what VAT you can reclaim. So yeah.
Yeah, that's right. So Julie, I'm very conscious of people's time, but equally, do you just want to throw away a few comments on personal tax and how that impacts on people working in the UK?
Well, it depends. So you would prepare a personal tax return, and even if you're non-resident, you may need to complete an individual tax return, because you might, whilst you're working in the UK, you might be actually receiving remuneration while working in the UK, which as an employee would mean that you have to complete a tax return. So it's predominantly going to be for your directors of the company, so UK based and resident here. We do have a statutory residence test, which is very formulaic. So do ask about that as well, because actually if you're here for so many days, it determines whether you'd be resident in the UK or not. And if you're resident in the UK, then you're taxed on your worldwide income. We do have some, if you're not going to be here for very long, we do have some remittance-based rules which you can look at. And if you're non-resident, then you'd be taxed on your earnings, or it might be that you find there's not much. So yes, so there's lots to look into there, is what we're probably trying to say. It can't be summarised in 2 minutes, so it's something just to look at, ask about your personal tax situation. If you're thinking of coming to work you're going to be working in the UK and being paid for that employment.
Thank you, Julie. So I think that my takeaway as a non-tax specialist is always that you should never pay any individual, wherever they're based, without speaking to the tax accountant first, because there are almost always seems to be a tax consequence that bites you if you don't do so. So thank you very much. I think we finished the polling questions. I'm hoping that the answer to are you interested in trading in the UK is a yes, so that we've done a little bit of our job right. I'm also feel like I should just say that, you know, within HLB in the UK, we do have all areas of the country covered. And although you're speaking with Beaver and Struthers now, all our member firms in the UK are sort of ready and wanting to welcome you and support you on that journey. And I think the takeaway question is just to seek advice and to ask, because although we share the same language, we have subtle differences and misunderstandings can come out of that. And that's where I'd like to say thank you very much and pass back maybe to Shannon.
Yes, we're super happy that you were able to share your expertise with us. And thank you everyone for attending, and we hope to be able to help you in your expansion into the UK very soon. Thank you.